Well, nothing surprises me with the US administration under Trump can go either way within minutes, let alone 24 hours. Yeah, I think you're right to say that he's going to hold his cards close to his chest, not going to give anything away. And I don't think the market was expecting a full deal here, handshake, it's all over in terms of trade wars. I think what they're hoping for is at least some détente to an extent where they shake hands and say we want to work together. That'll be good enough for the market, I think. So it doesn't pour cold water on a deal happening. The deal was never going to happen this weekend, but I think it still means that Trump will play hardball, try to get a handshake in some way from President Xi, but let's see, wait and see what happens.
Toby, if they do get a handshake without a real substantive deal here, I mean, is that enough to give the market some movement to the upside?
Yeah, I think the market will take that as a positive sign in so much as, whilst it doesn't mean that it's all over, it means that potentially they will get to the table and they will come to some sort of arrangement. It's in the interest of both countries, I think, to come to some compromise over the medium term. I don't think this is over short term, but the market at least will take a little bit of the risk off play that it's got on in relation to tariffs if they can see that both Trump and Xi are meeting and talking.
It's interesting, though, Toby, because certainly the trade tensions are hanging over the markets, but it's not the only fear out there. I mean, we look at what's going on in China's economy. We're awaiting additional data this week, in fact, on the outlook there. I mean, that, too, has been a real threat, given that China is such an anchor for the broader region. What are your expectations on this front? Come a deal or not with the United States, is the China growth story still something to worry about for investors here in Asia?
Well, I think the market's factored in a slower growth profile for China over the medium term. And I guess the thing that was impacting their concerns so much was a tariff being an exogenous shock they hadn't priced. So the slowdown doesn't really necessarily matter as long as it's controlled. So we look at the PMIs this Friday coming out of China, we reckon around 50.2. It's a continued softening. But overall, that's a measurable softening. And we do expect that the authorities over there will have the tools in place, whether it be through monetary policy rate cuts or through some fiscal stimulus, to be able to keep the economy slowing in a measurable way without causing any form of collapse.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.